Hi, folks. I wanted to take a moment to go through the market stats that has been released by the Toronto Real Estate Board, or the Toronto Regional Real Estate Board, as they're now relabeled themselves. The December 2020 market stats have now been released. What I've done for your interest is I've kind of benchmarked a lot of the stats with, relatively speaking, to this December, which has now given us a full 1 year fiscal to analyze the data, how we've performed, relatively speaking, to this December versus last December, or this December versus this year versus the last couple of years. So I'll take you through the different slides and explain to you how we are currently doing in the real estate market. Very interesting stats, especially considering that we've had a pandemic. This is unlike any type of unlike any other market conditions that we have seen in the past. So let's take a quick look to see how well the real estate or market has performed, or how poorly it has performed. So in terms of numbers, we looked at sales, month of inventory, average price, and days on market. Now, if you look, relatively speaking, to December 2019 versus December 2020, we actually saw an increase that happened in these sales figures. So as of December 2019, the number of sales or inventory in the market that had happened was 4,399, whereas in the month of December 2020, we actually saw 7,180. That was a significant jump. Matter of fact, a 63% jump, and that's been an all-time high, relatively speaking, to what we've seen in the past years. One of the reasons we think this happened is because there was a lot of because of what was happening with the pandemic. There was people that generally just held in terms of doing real estate transactions. Sellers and buyers kind of sat on the sideline, and as the optimism picked up, as the interest rates remained low, we just had a lot more people that were eager to get the market kind of going again. We are now seeing that more and more people are starting to have active conversations in terms of looking to sell their homes. In terms of months of inventory, this is a benchmark that us realtors use to kind of give us an indication of whether it's a seller's market, a buyer's market, or what we call a balanced market. That's the figure where it says MOI. In December 2019, MOI was 1.7, whereas December 20th, speaking, the MOI was 1.1. Now, what that means is anything over 6 is a buyer's market, anything between 4 to 6, as I said, is a balanced market, and anything that's below 4 is a seller's market. And right now we are seeing an all-time seller's market. And generally things that start to happen in a seller's market is we do see that the sellers are in a better position in terms of what they are willing to offer the cooperating agent. So generally the cost that we pay cooperating agents about 2.5% when we bring a listing out. We are seeing certain agents that are now trying to test the market at 2.25, and they're still being very successful. Given the lack of inventory, the agents are still moving forward with completing the transaction with any particular house, irrespective of the cooperating commissions being slightly dropped. I'm not seeing anything below 2.25 right now, so I'm not here telling anyone to go below that range right now. What's healthy and what is still active in the market is about a 2.25 incorporating commission versus the regular 2.5. In terms of average price and days on market, a huge jump, relatively huge jump. Last year, same time, we saw the average price on market was about 838. Same time this year, the prices have now jumped to 932,000 for an average detached home across the different cities with Toronto, Peel, York, and GTA. That's about 11% jump, relatively speaking, month to month, year over year. In terms of how we performed each quarter when we looked at 2019 versus 2020, so Q1 2019 versus Q1 2019 versus Q1 2020, Q2 2019 versus Q2 2020. So we looked at the different quarters, respectively speaking, compared to the 2 years. And we started off the year very strong compared to 2019. We saw an immediate increase in supply as soon as the year kicked off. Once the measures started getting a little bit more tighter with COVID, what we saw was a drastic drop in inventory. Now, keep in mind, Q2 is the time, or that's around what we call March, April, May. That's generally Q2. Actually, no, January, February, March is Q1, April, May, June is Q2. So in Q2, we actually saw a drop in inventory. So once things started coming down, concerns of COVID started increasing, we saw the real estate market kind of take a major pause, right? Sellers were not willing to list their homes. They did not want people coming in their houses. They were very concerned with concerns of COVID. And instead of taking possibly, going in there and taking drastic price drops, sellers just withheld their decision to sell during that period. And what really helped back that decision was the government stepping in and saying, giving people the grace on their mortgage payment. So people didn't necessarily feel the pressure to actually sell, even if things got really tight for them. Now, Q3 of the same year, much to everyone's surprise, I think during this period, everyone was 50-50, real estate market's going to crash. This is going to be the year where we're going to see some really low numbers. But I think, given the activities that are happening in the economy, with the government being very strong, very on top of, and how they safety measures they put in terms of keeping the numbers low with COVID, the banks dropping the interest rates, we actually saw an increase sentiment in the market. Consumers were very optimistic that the market was going to do well. We saw people qualifying for higher amounts, and that helped the inventory and the number of transactions that happened in 2020 to actually increase for us, irrespective of what was happening with the actual pandemic. Now, we looked at historical sales data. This is just taking the number of oh, I realize there's a mistake there, but this is supposed to say historical sales data. We just looked at the number of transactions that actually happened in every particular year in the Toronto real estate market, and we tried to kind of get a gauge of, how active is the market. And what we're seeing is we are slowly going back up to 2016 inventory levels. 2016 was one of the highest inventory levels that we saw in the last 5 years, and 2020 actually came in really close behind that. The 2018 drop that you see there is in response to a lot of the changes that the government did with the stress test, the foreign tax buyer guidelines or controls they've put in. We saw a major drop in the 2018 market, and that's what you're seeing, the little dip in the market graph there. Moving forward, what does this mean in terms of pricing? We are seeing an upward trajectory. The average, as I said, the average price of homes have now skyrocketed. Toronto is now very close to Vancouver, where the average home price is getting very close to the $1 million mark. It is going to put a lot of pressure on first-time home buyers to kind of make a move, because the longer they decide to hold, the higher the prices are becoming. What we have here is how the different cities performed. We looked at the regions performed. We looked at Durham. We look at New York. We look at the city of Toronto. Overall, I am going to be posting these slides for you guys to go through. What we noticed is, detached homes in the city of Toronto has now climbed to approximately 1.4 million, whereas if you're holding on to a semi, you're looking at approximately 1.16. Townhomes are now going in the ranges of 1.125, and condominiums, which truthfully struggled somewhat this year, they're hovering in at around 730,000. The number of sales that happened in the city of Toronto this year was about 2,713, Average days on the market is about 43, and the average sale is about 894,576. Respectively speaking, this is how you should be looking at all the different graphs that we share with you. If you look at the top banner, that gives you which region or city is being assessed, and the different graphical pictures there. The house on its own is a detached, the two houses together is a semi-detached, and then townhome and condominiums. This is how Peel Region performed. As I said, the statistic is very much the same. The number of days on the market was 28. We are seeing that people are starting not to be so much focused on the urban cities anymore. People are willing to venture out further outskirts to get more bang for their buck, more space in terms of square footage, more land in terms of backyard frontage space. So we did see Durham do really well. We saw Peel do really well. And we also saw York do relatively really well comparatively speaking. Here is just a quick little snapshot of how the average house on market looks right now. This will just give you a very fast glance of, how's Pickering doing, how's Toronto. So Pickering and Toronto are now hovering very close to each other. If anyone's interested from an investment standpoint, if you look right here, Oshawa is still a place that you might want to get your hands on. Prices are growing, but not as fast as things as Pickering and Ajax these days. Um, but overall, this is a quick little snapshot of the average home price in the different cities.